A credit card is a payment card issued by bank to users or cardholders to enable the cardholder to borrow funds and pay a merchant for goods and services. The credit card holder will receive a financial statement for the credit card monthly. The cardholder should pay the statement balance within the interest-free period, that is 20 days from the statement date. And the minimum payment is 50 ringgit or 5% of the total balance of the statement, whichever is higher. If there is no payment is made within the interest-free period, then late payment charge will be imposed. That is 1% of the total outstanding balance. Other than this, if there is still a balance of the latest amount after the interest-free period, that is after 20 days from the statement date, the finance charge will be imposed on the outstanding balance. And most banks will charge at 18% per annum. But this is calculated based on daily rate, meaning that the interest rate is 18% in 1 year. So if you divide it by 365 days, that is 0.0493% per day. Give you two situations to think about. In January, Amy and Mr. Tan, each of them paid 1,500 ringgit to buy a fridge by using their credit cards, which are issued by the same bank. The finance charge on the credit card is 18% annually, and the late payment charge is 1% of the outstanding balance. Amy did not pay back after the interest-free period, while Mr. Tan paid 100 ringgit a week later. Calculate the total outstanding balance on February, 15 days after the interest-free period. So as for Amy, since she didn't make any payment, so late payment charge will be imposed. That is 1% of the outstanding balance, so 1% of the 1,500 ringgit. So the late payment charge is 1,500 ringgit times 1%, that is 15 ringgit. Other than this, there is a finance charge, 18% annually. So the finance charge is 1,500 ringgit times 18%, but this is per year, so the charge is only for 15 days after interest-free period. I mean, it's 15 days, so need to multiply with 15 over 365 days. That is equals to 11 ringgit and 10 cents. So the total outstanding balance on February is total up everything 1,500 ringgit plus with the late payment charge 15 ringgit and the finance charge of 11 ringgit and 10 cents. That is equals to 1,526 ringgit 10 cents. As for Mr. Tan, he made a minimum payment, so there's no late payment charge, but there is still a finance charge on the outstanding balance. So as for Mr. Tan, the finance charge will be on the outstanding balance is 1,500 ringgit minus the 100 ringgits that he already paid. That means it's 1,400 ringgit here, and times with 18% annually, 18% times with 15 days, 15 per 365 days. That is equals to 10 ringgit and 36 cents. So the total outstanding balance of for Mr. Tan is 1,400 ringgit, the balance, plus with the finance charge 10 ringgit 36 cents. That is equals to 1,410 ringgit and 36 cents. So you can compare between the situation of Amy and Mr. Tan. Amy need to pay an extra late payment charge of 15 ringgit, and you can see the finance charge is also higher than Mr. Tan because she didn't pay back anything. So the 18% will be charged on the 1,005 ringgit. But for Mr. Tan, the 18% is charged on 1,004 ringgit. So there will be less 100 ringgit instead.